let's talk Ford Motor Company. Is this old giant F on the ticker finally putting the pedal down on the stock chart? Or, are Wall Street analysts actually onto something with their skepticism? It's a real push and pull. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're doing a deep dive into Ford using data we pulled on September 29th, 2025. We're trying to figure out, based on our research, what's behind this gap between Ford's big future plans and where the stock's sitting right now.
And we start with a bit of a tailwind, actually. The market's looking up this morning. Major index futures are higher, thanks to some strong U.S. economic data, so that helps the mood overall.
Right, a nice backdrop, but there's always a but, isn't there? The Fed, we've got officials speaking today, and, any hawkish talk could just slam the brakes on this whole thing. How's Ford itself looking amidst that uncertainty?
Well, the big internal driver for Ford, the real catalyst, is this huge bet they're making, a new universal EV platform. And crucially, a plan for a $30,000 electric pickup truck by 2027.
$30,000. That feels like the key, doesn't it? Aiming right for the mass market.
Exactly. And it's not just about you or me buying an EV. Think commercial fleets.
Yeah.
They buy hordes of F-150s. Ford's basically saying, that $50,000 problem you have, we can solve it with this $30,000 truck. It's potentially huge. Fundamentally, if you look at the cash flows, some models suggest Ford's fair value could be north of $26 a share. Even if you're more conservative, just looking at earnings, you're still talking over $14.
$26.
Right.
Wow. Okay, that assumes they nailed the EV plan by 2027, right? But right now, the stock's just hovering above $12, and yet Wall Street, it's like they're shrugging, 68%, have a hold rating?
A massive 68% just saying hold. It's this professional inertia. They seem to be waiting, maybe for more proof.
Someone isn't waiting, are they? What about the traders, the fast money?
That's where it gets interesting. If you look at the options market, the sentiment is, frankly, screamingly bullish.
Right.
The put-to-call ratio, it's incredibly low.
Yeah.
0.12?
0.12. So let me break that down for you listening. That means for every, say, 12 bets that the stock will fall, there are 100 bets that it will rise. That's extreme confidence from the trading crowd.
It really is. And the charts seem to be backing them up, totally ignoring the analysts for now. The technical picture looks quite positive, actually.
How so?
You've got a solid uptrend. Been building since May. Higher highs, higher lows. That's textbook healthy upward movement.
And wasn't there a big move recently, last Friday?
Yeah, exactly. A huge jump in price, and importantly, on massive volume. That shows real conviction, likely big institutions stepping in. Plus, momentum indicators. They've just flipped from neutral, sort of coasting, to positive. The speed up is increasing. And like you said about the options, traders aren't just talking, they're betting. There's a huge pile of contracts right at the $12.50 strike price. That's become the line in the sand for the bulls.
Okay, so you weigh it all up. The big EV catalyst, the strong technicals, this bullish options action against the skeptical analysts. What's the verdict from our research?
We're landing on a cautiously bullish outlook. The momentum and the potential disruption seem to outweigh the analyst inertia, for now.
Cautiously, though. What are the main risks we need to keep an eye on?
Well, obviously that big 68% hold rating is a drag. Can't ignore it. There's also a minor, slightly technical contradiction in one volume indicator, nothing major but worth noting. And of course, the big macro risk. The Fed turning hawkish today.
Got it. So for the next few days, what are the key price levels to watch?
The absolute battleground is $12.50. Holding above that keeps the immediate momentum going.
And the O level, where does the bullish idea break down?
That would be a close below 1150 cents. If it breaks and closes under that, the whole positive technical setup really starts to fall apart. That's your critical support.
Okay, so let's wrap this up with a thought for our listeners.
Right. Given this aggressive technical breakout we're seeing, and let's face it, a valuation that looks pretty cheap fundamentally.
Yep.
You have to wonder, how long can those Wall Street analysts really afford to just sit there with their hold ratings before they're forced to play catch-up?
Something to think about. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.